Hi, I'm Montana York, and I'm your host here at Cambridge House. And today I'm joined by the one and only Gareth Soloway, President, CFO, and Chief Market Strategist for InTheMoneyStocks.com. Gareth, welcome back.
Hey, thanks for having me back.
Anytime. Gareth, let's get right into it. The last time I had you on was in February. Lots has happened out there since then. We've had a war, inflation. What's going on?
Yeah, so it has been insane between February and now. We've seen the Federal Reserve hiking and consistently saying they're going to hike more. We've seen inflation at 8.5%. In fact, we're going to get a CPI number coming out here shortly. That'll be a big deal for the market. And really, yeah, like you said, the war in Ukraine is causing a big spike in food prices, in a lot of prices in the supply chain. And that's really putting even more pressure on inflation. So the markets are running scared at this point. Although, again, like you said, there's certain points where when it's overly scared, you expect a bounce. And I think we're getting close to that point in this market.
Great. And then CPI and the calls there. Do you have any predictions?
Yeah, CPI, I think they're expecting it to come in at around 8.1%. I'm guessing it's going to come in just a shade underneath it, maybe 7.9 or 7.8. That should be a positive for the market if that does happen. And by the way, I could be wrong. If it's above 8.1%, the markets are going to panic and sell. And if it's below, they're going to rally. And the reason why they're going to do that is that the market is looking for peak inflation. The market wants to know that this is the top. This is as bad as it gets. And so if we have a slightly lower number, the market's going to say, okay, the worst is over. We're on the mend here. And if not, then the market's going to say, oh my goodness, how high could this go? And then this is where imaginations kind of run wild, right? The market starts to freak out. Could it go to 10, 12, 15%? So it's a huge number and it's going to be something the market moves on.
Great. And then speaking of markets, the QQQ call you made, you said you would be a big time buyer if it went below $300. Today it's trading at just over $299. What's there for you, and why is that such a hot one for you?
Yeah, so I'll show my chart here. So this is just a short-term trade, just to be clear. So again, ultimately, I do still think the markets have a lot more downside to go, mainly because I do think the Fed is going to continue to hike rates to combat inflation, and that likely could push us into a recession later this year. But in terms of the level, I mean, just as a bounce, you can see we've sold off on the QQQ from all the way up here at around 370 down to 298 now, where we currently sit. And there's major pivots right in here. So in terms of support, there's a lot of support here. Again, that doesn't guarantee us a bounce, but it does put probabilities in the favor of a bounce. And again, what's interesting is we're right into this level going into the CPI number, which always usually happens. We see this happen where, a major level is you're right on it, right into major news. Then that therefore the market will either bounce or break the level, right? So again, short term, we should see some support here. It's struggling to hold that today because of the worries over the CPI number. If it does break, then you have to think we are heading significantly lower. I think even as low by later this year. And I think regardless of whether we bounce here or not at the 298, 300 level, eventually we're going to see the pre-COVID high right here on the QQQ. And the bottom line is just, inflation is going to take a bite out of earnings, right? Because these companies are having to, pay more to bring in the supplies to create their products, the phones for an iPhone or for Apple. But also you have to think about what inflation is doing to the consumer. So it works on both sides. The consumer is starting to feel the pressure and the pain of paying more and more money for food, energy, and goods, and then they're going to be able to afford less. And so it's kind of a double whammy here. And this is why longer term, I do worry that the markets and the economy are going to suffer, even if we do get a bounce at this level.
Okay. And while we have your charts up, Gareth, do you want to walk me through a few more ETFs or anything else that's kind of catching your eye on the market right now?
Yeah, let's do that. So I think one of the things to keep an eye on is the natural gas ETF. We've seen this kind of go sky high because of what's been going on in Russia and Ukraine with gas supplies going to Europe, and then the US is going to try to fill that void and everything like that. And you can see we had a significant reversal here. That to me tells me we have a short-term top, and I think you'll probably see further downside. We are coming into the warmer months for Europe as well, which means less natural gas is needed. And lastly, I'd just like to mention the USO, which is the oil chart. And notice again, the oil chart here is right on major support. If this level breaks, oil is going to go lower. I do believe that later this year, oil will continue down, mainly due to a weak global economy. So, everyone's so focused on, oh my goodness, the barrels of oil from Russia maybe, not getting out to the market because of sanctions. But the bottom line is everything that's going on, if it's going to slow the economy, and that's the Fed's plan by raising interest rates, is going to lower the demand for oil. And if you lower the global demand, it's going to more than enough make up for anything that Russia isn't getting on the market. So I think, again, expect lower oil, lower gas into the summer. I also think into the midterm elections, that's usually the way it plays out as well.
Great. Thank you. And then let's shift gears a little bit here and talk about Bitcoin, the topic on everyone's mind right now. Where are we at? Where are we going? What's there for you?
Yeah. So Bitcoin, number one, the Bitcoin did see a big drop recently, or just in the last, 36, 48 hours. And here's the chart of it. And you can see, again, we were hovering inside of this sideways range, right? And again, I keep on mentioning this because investors are kind of a little bit they're not in the know when it comes to technical analysis, but this move down is what we call, with this consolidation, a bear flag, or an in spirit of bear flag. And again, notice how it's a big move down followed by lots of sideways chop with a slight up angle. That is very, very bearish. So again, just knowing that, I figured that we would see a breakdown. The beauty of this is we went right into the 2021 lows, and you are seeing a bounce here. So again, a little bit of a bounce, not a huge bounce, because the markets are still skittish. And remember, Bitcoin generally trades with the tech stocks. So if the tech stocks are skittish, then Bitcoin's going to be skittish. Now, the big drop yesterday in Bitcoin was a result of what's going on with a stable coin, UST. And there's a bunch of kind of crazy stuff where it depegged from the dollar. And it kind of created a lot of fear in the cryptocurrency sector. So I think, again, most of this is, at least short term, is an overreaction. I think Bitcoin has a chance to bounce back to 35 to 38,000 over the next couple of weeks. But then I do think it's headed lower. So short term, very short term, in the next week or two, I think I'm bullish on the stock market, bullish on crypto. But then if you zoom out, I do think you still have further downside. Minimum target is 20,000. Maximum worst case scenario on Bitcoin is 12,000.
Okay, great. And I know that you don't really, no one likes to give financial advice, but you did say in a bloodbath in crypto to acquire more. Would you recommend buying now, or would you kind of wait until you see this low that you're anticipating, or both?
Yeah, so I think the thing is, we just know, none of us know. And again, I have my general projections. I see 20,000, maybe. I see 12 as a worst case scenario. I could be wrong on both, and it could go to 29 and then start to move back up. So I think investors have to kind of think about what's their game plan. Are you a long-term investor? Are you kind of a short-term investor? Short-term investors, then you're finding support. Like, I bought some Bitcoin yesterday right around this 30,000 level because that's short-term support, but I'm not going to kind of be in that for a long period of time. On the other side of the coin, if you're longer term, then you really want to have a game plan about like dollar cost averaging in, right? So for me, if I was a longer term investor, I'd say, okay, well, I have $50,000 I want to put in Bitcoin. I'm just going to spread that out amongst 10 buys, very structured. So maybe $5,000 goes in at 30,000, 25,000, another 5,000, 20,000, and really just space it out. And I think that's really, really important to not expect to pick the exact low. Like, it may not go to 20, it could go to 21. And you don't want to be sitting there and saying, oh, darn, now it's at 500,000. I missed the entry there. So having a regimented, pre-selected kind of, plan for adding and doing it slowly so you can kind of dollar cost average is really, really important if you're a long-term bull on crypto.
Great. Thank you. Any other further market chalk you want to touch on?
Yeah, I think the only other thing to mention is you're seeing some crazy price action in some of these tech stocks, and it's fun to look over some of these. Let's show the chart again here. So like on an SC, which is C limited, look at this collapse on this chart. It is just meteoric collapse. Roku could be another one that you're looking at. You see the drop in these things, and I do think they're getting to points where you're going to get a technical bounce. And at some point, they're actually going to bottom out, where sentiment is getting so bearish, so bearish. And again, I mean, we could look at stocks, even like a firm. I mean, look at this incredible drop. Now, this is having an issue based on earnings from UPST as well as SoFi. But I mean, the stock was $180 stock. It's now $17. So does this go to $10? Does it go to 15? Where's the low? But if you have a time horizon of, let's say, 3 to 5 years or 10 years, you're starting to get in areas where some of these names, the kind of the best of breed, can be tucked away in a portfolio. So, even I'm trying to think of some other ones out there, but like a Roblox, by the way, reports earnings today. So that, who knows what happens to that. But, Roblox, $141 to 22, yes, maybe it goes to 15 or 10. But if you, again, structure your buys and say, okay, at 20, I'm going to buy $1,000 worth, at 18, another 1,000, at 16, eventually you're going to get a bottom. And then these things can trade up. I mean, if it goes to 10, it could easily go back to $40. Doesn't seem like a big move in comparison to 140 to 40. But if you're in at an average price of 20, you're making 100%. So I do think, if you have a structure and you're not going to let emotion get control of you, I think there are opportunities in this market to start nibbling on some of these like down 80% plus really good quality names.
Great. And Gareth, if my listeners wanted to find out more about you or other great advice like this, where would they find you?
Sure. So Twitter is the best place. I post on Twitter a couple times a day, some really interesting insights at Gareth Soloway. And then I have two websites. One is inthemoneystocks.com, a service called Verified Investing Alerts, where I give out trade signals as well as daily videos. And then if you're more just into crypto, verifiedinvestingcrypto.com, same type of service, trade signals and a daily video.
Great. Thank you so much, Gareth.
Thank you so much for having me.
Anytime.